I am David Stein of Money for the Rest of Us, and in this video I explain what happens after you buy a stock. Back in the day, in the 1960s, early 1970s, and before, when you bought a stock, you got a paper stock certificate. And when you sold a stock, that paper certificate transferred to someone else. The problem with that is that trading volumes got so high that there were stock certificates being moved all over the place. That's why most brokerage firms were located on Wall Street, because it was easier just to move the paper. Well, at that point, they established something called the Depository Trust Company. And they did what was known as share immobilizations, essentially a big electronic bookkeeping system. In every stock, when you buy a stock now, it's registered in what's known as the street name. The actual beneficial owner is a company called Seed and Company, C-E-D-E. And every brokerage, let's say Schwab, Fidelity, and Vanguard, essentially have an ownership stake in this mass fungible, essentially glob of stock. In other words, it's one big chunk of stock, let's say Apple, that is registered in the name of Seed and Company. So in your particular stock brokerage, in your account, you might show that you have a share of Apple, but in reality, what you have is just really an IOU from Seed and Company. This gets to be a problem when it comes to proxy voting, which is the process for voting on shareholders' resolutions, such as who should be the member of the board, or if a company should merger. It's an issue there, and it can be an issue with class action suit settlements. For example, Dole, the pineapple company, there was a big class action suit after they merged. And Seed and Company, or the DTC, showed that there was about 37 million shares outstanding. But when the settlement occurred, there were 48 million individuals that said they owned shares in Dole and needed to get part of that settlement. Why such a big gap? Well, in that case, what happens is typically when you buy or sell a stock share, it takes 3 days for the stock to settle. And so if there's going to be a merger, they essentially close the books, but there's still trades that haven't settled. And so there was some just miscalculation, not even miscalculation, it's just there wasn't sure. The brokerages had to come together and say, well, this is what happened in terms of which securities were sold after the merger occurred in terms of that 3-day settlement period. But in addition, what happens is brokerage firms, they lend out shares as part of short selling. If you want to short sell a stock or short a stock, you borrow the shares and then sell those shares in the open market. And then when you're ready to close out your short position, you buy the shares back. If the shares fall in price between the time you sold the borrowed shares and buy shares back and return them to the account that were borrowed, then you make money. The problem is all this short selling is happening all of the time. And as a result, the shares of Apple that you might own, they might not actually be in your account. Because what happens is my account, your account at Seed and Company, or essentially your account at your brokerage account, let's say Schwab, which then has an account at Seed and Company, they haven't differentiated which shares of Apple's goes to which particular client. So the shares in your account might have been lent out, but that's not actually recorded in your account. And as a result, it becomes unclear who owns what. Now, there are some potential solutions to this in terms of what is known as tokenization, in which case that using blockchain technology, they'll be able to immediately know who owns what shares. But that's perhaps a decade or more in the future. Right now, it's just Seed and Company that has all the beneficial ownership, and the brokerage firm has to sort out the mess when it comes to proxy voting, who's voting, and when it comes to shareholders' resolutions. So that's what happens after you buy a stock.